Hi, Chuck Hughes here. It's great to be here today. I'm glad you could join me. I want to talk about my trophy trade system for trading stocks. So I've been using the trophy trade system for decades now, trading stocks and ETFs. And it's working well in the current market conditions. I'm going to display my brokerage account statement that shows that I currently have over $751,000 in open trade profits for my stocks using the trophy trade system. Now, I like to use technical indicators to trade stocks. I believe all of the known information about a company is already reflected in its stock price. So if you can quantitatively measure the price movement of a stock using the trophy trade trend following system, you can determine the most likely future price movement of a stock. This can give you the edge you need to be a successful trader. Now, the trophy trade system utilizes a two-step trade selection process. Step number one is we want to select a stock on a power profit zone buy signal. And step number two, we want to select a stock trading in the Keltner channel buy zone to get a lower risk entry point. Now, the two trophy trade system trade selection steps are designed to put the odds in your favor, which can increase your percentage of winning trades and make you a more successful trader. And the two trophy trade selection steps have clearly defined rules and are mechanical in nature. So there's no subjective judgments required to trade the system. It's strictly mechanical, and you don't have to guess about what you should do when you're trading stocks. Now, I prefer to use a mechanical system to select trades instead of emotional decision making. Following a system with a long history of success can give you that discipline you need to be a successful trader. And I've been using trend following successfully for more than 35 years. As a side note, the trend following worked well in the 2002 and 2008 bear markets when we had short positions, and I used the trophy trade system to select short positions by purchasing put options or inverse ETFs. So it makes money in bull or bear markets. So let's look at the power profit zone. I'm showing you a price chart for XHB, and XHB is the S&P 500. It's the home builders ETF, and this black line right here is the price movement of the XHB ETF. And this blue line right here is the power profit zone line. So whenever a stock or ETF is trading above this power profit zone line, it's on a profit zone buy indication. So we can see that XHB crossed above the power profit zone line back in May, and it's still above that power profit zone line, so it's still on a buy signal. Now, whenever a stock or ETF is trading in the power profit zone, the most likely future price movement of that stock is up. So buying a stock when it's trading in the power profit zone puts the odds in your favor and can result in a higher percentage of winning trades. Now, it's that simple. Everything else is just noise. It only takes a minute on the internet to pull up the power profit zone chart for a stock, and you can determine right away if that stock is on a buy signal or a sell signal. Now, a stock will remain on a buy signal as long as the stock price is trading above the power profit zone line. And many times the price trend of a stock continues in the same direction and can persist longer than you might expect. So we like to just follow that that trend line with our stock trading. And using the power profit zone system allows us to follow the trend instead of trying to predict the trend. Trying to predict the future price movement of a stock or ETF is very difficult to do on a consistent basis. So we'd rather just simply follow the trend and try to predict it. Now, step number 2 is we want to select a lower risk entry point for our stock purchase using the Keltner channels. And once we select a stock that's on a power profit zone buy signal, we want to use the Keltner channels to select a lower risk entry point for our trade. Below is a daily price chart for the NASDAQ triple Qs, and we can see from this price chart, these vertical red and black lines right here, that's the daily price movement of the Qs. And we can see that since April, the price goes from the lower left part of the price chart to the upper right. So obviously the Qs are on a very strong uptrend, and these are the type of stocks that we like to focus on. Now, if you want to participate in this rally in the Qs by purchasing the Qs, the question becomes, at what point should you purchase? What point should you jump in? This is a very strong price uptrend. And the question is it too late to purchase the Qs? So what we do is we use the Keltner channels to help us time our stock purchases with a lower risk entry point. And the Keltner channels act as an overbought, oversold indicator. There's 3 channels. This upper blue solid line here is the upper channel. The middle channel is the dotted line in the middle here, and then we have the lower Keltner channel. Now, stocks normally trade inside of these channels. So when they trade outside of the channels, then that presents opportunities. Now, when a stock is trading above the upper channel, it's getting overbought, and it normally will trade lower. And you can see I circled the days that the triple Qs were trading above the upper channel. They're getting overbought, and then you can see that they retraced after being overbought. So right here, overbought, trading above the upper channel, retrace. Again, trading above the upper channel, retraced. Trading above the upper channel, retrace. Overbought, retrace, overbought, retrace, overbought, retrace. So there's a clear pattern there that when the stock is trading above the upper channel, that it's getting overbought, and then it retraces. So when a stock trades below the upper channel, we consider it to be in the Keltner channel buy zone, and the stock or the call option on the stock can be purchased. And the most likely future price movement for a stock in the Keltner channel buy zone is up. So we can see that after the stock retraced below the upper channel, it rallied, retraced, rallied, retraced, rallied. So this has given us several opportunities to participate in this QQQ rally by simply waiting till the Qs retrace below that upper channel, are no longer overbought, and then we can jump in and buy the Qs. So again, this price chart shows us that we had several opportunities to enter the Qs with a lower risk entry point, because we know once the stock is no longer overbought, it's probably going to rally, and that gives us a good entry point. So whenever a stock or ETF is trading in the power profit zone, the most likely future price movement of the stock or ETF is up. And when a stock is trading in the Keltner channel buy zone, the most likely future price movement for a stock is up. So these two steps put the odds in our favor. We want to wait till the stock is on a power profit zone buy, and then we want to wait till it's trading in the Keltner channel buy zone. So those two steps increase the odds that our trade is going to be profitable. Now this can result in a higher percentage of winning trades, and right now I'm displaying my E-Trade brokerage account statement, and this shows I have $751,203 in open trade profit. So that's for Apple stock, Amazon, DocuSign, NVIDIA, PayPal, and Shopify. And in this column, it lists the stock symbol. In this column, the price we paid for the stock, the current price. And then in this column, it lists the dollar profit for the stock. So we have $86,000 profit in Apple, $94,000 in Amazon, $241,000 in DocuSign, $214,000 in NVIDIA. So the system is working well in the current market environment. Now I trade a really large account. You could trade just a few shares of these stocks in a smaller account using the trophy trade system. So that concludes my presentation for now. In my next video, we will explore using the trophy trade system to trade options. So thanks for watching today, and I look forward to my next video presentation. Have a great day, everybody.